In this video, we're going to talk about what is CPI data trading, and then we're going to talk about 3 strategies you can use if you want to trade this event. So first, let's understand what is CPI, why does it move the market? Well, it's an inflation measure along with PCE, which is very critical for the Federal Reserve to make interest rate decisions, and that's the reason it moves the market. The currency market will move based on what the Federal Reserve, in this case for the dollar, is going to do with interest rates. Okay, and CPI is one of the main things they look at, along with PCE and along with employment, to make their decision to adjust interest rates. And that's the reason the market moves. So here's 3 strategies to trade this event. The first strategy is, before the event even starts, find a currency pair that's already strong and a currency pair that's already weak. And the reason for this is, depending on which way the data comes out, you want to pair a weak release with the weak currency, or a strong data release with the strong currency. And this applies not just for inflation, but employment and other types of releases, okay? Because you want to get, extra out of that trade if you are pairing it with a currency that already wants to go up or already wants to go down. What you don't want to do is fight a currency that's already strong or already weak, okay? So that's the first thing. The second thing you want to do is trade the shock. And what I mean by this is, you need to figure out if the release is actually a shock to the market. And I'll show you how that's done if we just go to the screens. Okay, so how do you identify a shock? Well, what you need is a professional economic calendar. And the only way you can figure out what a shock is if the release, the actual here, comes out outside of what everyone expected. And what a professional calendar will give you is the full range of expectations. So if you're on like Forex Factory, for example, you just get one expectation number, which is going to be your consensus number, right? So it's like 2.9. But what you need to know is the full range of expectations. You need to know that there's some analysts expecting 2.7 at the low or 3.0 at the high. If we get an actual release that's below the low or above the high, that's where we could get a real market move, and that's what you need. So pick up a copy of Professional Economic Calendar for this release. It's at financialsource.co. The other thing is, you can also grab our strength and weakness indicator as well. It's our macro snapshot indicator. Very good for identifying what's strong or weak at any one given time. Okay, so there's 2 other strategies. You can fade the spike, and that's just where, if it comes in at consensus, right, then the market's probably not going to move. It'll pop in one direction. You can fade the spike. And then the third is to swing trade the pullback. So if you do get a big fundamental move, you do get something that's outside of consensus, the next session or the next day, you can look to trade that pullback. And that is how you trade CPI data.